Hello, this is KABOOM-SKYROCKET. Today in this video I'm going to be talking about the situation with oil going below the zero level and being in the negatives, so stay tuned. I'm also going to be talking about gold and how silver in that situation, the opposite side for where people wanted to take delivery, could definitely inflate the price of gold and silver. And that's what I'm going to go through, so stay tuned. If you're new to the channel, subscribe, hit the thumbs up, appreciate it. Leave a comment down below, let me know what you're thinking. Share the video with friends and family. So anyways, I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you did your own research, due diligence, and you like the investments you're pursuing. Alright, so alright, oil, I believe, went to about minus 37 on the May contracts. Okay, so the minus 37 on the May contracts. So the reason why I did that is because in order for people to take that oil, they need to have a storage facility that's up to code. And all these people that are buying the contracts, they were hoping that they can sell it to companies that wanted the oil, but these people that were trading it were just trading it, right? Just paper contracts, thinking try to make money, right? But because there is nowhere to store it, because there's ships all across the world in the ocean that are just standing around doing nothing, and you know, it costs a lot of money per day to store that oil. So there was no need for it, and it just dropped to minus 35 because nobody wanted it and nobody wanted to be stuck with it. So it's a pretty crazy situation, but I mean, you got to understand there's a lot of oil in the world, and you know, it's a very complex system because USA's the oil, you know, that's their oil reserves, right? The USA dollar is all backed by the oil. So when you got the oil going in negatives, I mean, there's spells a lot of catastrophe in the future for the dollar becoming very weak. It's a very crazy world. I mean, you used to think about oil being about 30, 40, like that would be the lowest, but now, you know, you're talking negative, and now today it's trading at $13 on WTI. But it's just a wild situation. Now with gold and silver, right? So it's already kind of happened with gold and silver, and it's happening in a sense at the bullion shops. So at the bullion shops, people want to get their bars of gold, they want to get their bars of silver, palladium, platinum. And so what happens is then there's nobody, like not many companies are mining that much gold right now, as well as the mint has limited amount of people working, so they're not pushing out a lot of bars or coins, so there's not a lot of gold in circulation, and so it's causing, and on top of that, it's people are more excited to have lots of gold and silver right now because they fear for their dollar becoming weak, and that's a way to insurance for inflation, so to keep some of their store of wealth. So that's the reality of things, and with, you know, with that could really happen towards gold when all these people want more gold on their paper contracts on the COMEX. They want it delivered to them, and then they're not able to get that gold, and then it increases the value, you know, whereas one day, you know, today it says $1,700, well then all of a sudden they want it, and all of a sudden it spikes to $2,500, then $3,000, then $5,000, then $10,000, then $15,000, then $20,000, as all these rich billionaires and central banks need that gold. So it could just create a big hype thing, But it's a crazy world, and I wouldn't put that out of the possibilities for happening, as well as the fear of the dollar becoming a lot weaker in the coming time. So that'll be something to watch. I mean, don't be surprised if we're talking in less than 2 or 3 years where you're seeing gold at $5,000 or $10,000 or $20,000. There's the amount of money that they're printing is just insane. So when you're looking at the markets, okay, so the way that the market should be going up is based on the oil. So when oil is really high and then the bond yields are going up, then that should be able to spike the market, right? But now they're able to spike the market with all this QE, all this money printed, because they'll centralize and just focus all on basically the big 30 or a lot of the SPY names, and then they'll push up those companies. And so if it's weighted, say 4 or 8% of Apple in the Dow or the SPY, well, that'll have a big effect if they're able to keep that company Apple fairly up during the day. So that's why there's so much pressure to keep Apple up, so much pressure to keep Microsoft up, so much pressure to keep United Health up, so much pressure to keep Home Depot and you know, Google and Amazon. So that's really the reality of things. The system's broken, and there's no way around it. It's just the system's broken, and I don't know what's gonna happen, if they're gonna be able to paper over it all. It's very uncertain times. I mean, if they weren't able to paper over all this money, I'd be throwing puts left, right, and center to all these companies, especially the banks, but they're having a net around them to be saved, so they're not going to be decimated. So anyways, that's Compound Interest Stock Guy letting you know what's up with gold. That could happen to gold in the future, and silver. It's already kind of happened to palladium as well as rhodium. And then with what happened yesterday with crude oil. So it's compound interest. Keep compounding your info, listen to my lingo, and shaka. Peace. I'm Audi 45.